Supply and demand indicator. Supply and demand is considered a basic economic term, which defines the presence of sellers and buyers in a certain asset. In trading, the supply and demand concept is an important factor in price movement. Supply and demand trading has become significantly popular because of its simplicity and intuitive sense. One of the most famous teachers of this trading approach is Sam Sidon. Sam started his career at the world's biggest financial exchange, the Chicago Mercantile Exchange. This helped him to master with a very high degree of accuracy the skill of real market timing. In addition, he gained the ability to predict market turns and market movements in advance. He built the initial supply and demand market timing technique from this experience over 20 years ago. In all capital markets, Sam has vast experience, over 20 years of trading. He has also been a part of the online trading academy where he propagates this trading style. How do supply and demand work? The basic concept is when there are more buyers than sellers, the asset price will go up. Conversely, when there are more sellers than buyers, the price will go down. When there is an equilibrium of buyers and sellers, the price will be in a range. These ideas are really simple and very powerful at the same time. They allow traders to analyze charts to define where the price is likely to go. Due to the fact that trading is all about price movement, the principle of supply and demand could be applied to forex currency pairs as well. Supply and demand zones are easy to identify. Basically, the SD zone represents an extreme, low or high, where price has significantly changed its direction. That is why it is simple for understanding even for novice traders. Visually, a demand level is formed when the price drops to an area, then consolidates and afterward rallies, thus identifying the price zone where there is demand. This is nothing but a support area. A supply zone is formed when price rallies and then forms a base, consolidating, and then starts to drop. This is how a resistance zone is formed. Due to this, a specific entry price, as well as stop loss and take profit levels, are also simple to define. It is again a strong reason to use this strategy for novices. There is no ambiguous interpretation of the zone possible. In Figure 1, we have used the supply-demand indicator MT4 on the Euros chart. The red-colored rectangles show the supply zones or so-called resistance areas. The green rectangles show the demand areas or the support areas. You can see that the indicator plots these levels automatically. If you look at the middle of the chart, price retested the demand zone and then strongly rebounded. This is nothing but buyers overwhelming the sellers, leading to higher prices. A similar situation happened with the upper supply zones, marked with red color, of the chart. Price created these resistance areas and later revisited the lower zone, afterward making a solid bounce down from it. Strength of supply and demand zones. The supply and demand have their own basics of weakness and strength. This gives traders some more clarity when using this trading strategy. The strongest supply or demand zone is when the price of an instrument tests the area for the first time after the level has been formed. This can be noted with Figure 1 chart with day trading strategy applied where the price tested the green demand zone for the first time. When you observe it closely, you can see that the price just touched the level and afterward continued to rally in the desired direction. This pattern indicates a strong level of demand and supply if it occurs at the resistance area like on the top of the Figure 1 chart. A moderate zone is when the price retests the demand or supply area for a second time. It slightly weakens the strength of the SD zones and thus, traders should be cautious with them. On Figure 2 chart, all the zones beside one small supply zone in the middle have been already tested, thus considered average strength. Moderate, weak, zones should be used only when you know what to do and have experience with them. People that are claiming that SD does not work usually use all the zones and decrease their probability with their own hands. But for higher chances, only fresh supply and demand zones should be selected. Supply and demand indicator settings. All the inputs of supply and demand multi-timeframe indicator could be divided into several groups. Zone types. There are 5 zone types that may be used to display zones, including zones with only wicks or zone with price action patterns like engulfing candles. Showing of untested zones. As mentioned earlier, we should seek strong zones that have never been visited before to get a strong setup multi-time.